It is such a joy to be sitting down with, well, virtually speaking, Jeff Gennette over at Macy's. A beautiful backdrop, the festive period already upon us, it would feel. And actually, festive times at Macy's when you're able to beat and raise on your earnings. Just tell us a little bit about whether this resilience in your numbers is going to be pushed forward to the fourth quarter.
So we're ready for the fourth quarter. And what I tell you is that the highlights from our earnings today was that we did beat our guidance and our expectations. We had an earnings raise based on the strength of our credit portfolio. But the real headline is that we're poised and well ready for the holiday season. Our inventory is in great shape. And, you know, when you look at it versus last year or versus a pre-pandemic year, it's in the right categories. It's with the right level of freshness. It's about a 55% freshness level, which is up 30 points from where we were in 2019. And it's in all the categories that you expect of Macy's. In the beauty business, in the apparel areas, in the home store, you know, we're well poised for Christmas. So good beat. We're looking very forward to kicking off the Thanksgiving holiday with our parade. And that really ushers in the holiday season. So we're ready for the consumer.
Talk to us about that consumer, Jeff, about the lower income bracket consumer, the higher income bracket consumer. Is there more resilience in the Bluemercury, in the Bloomingdale's part of your business, vis-a-vis the Macy's?
Yeah, so what we look at, Caroline, is we look at kind of many ways we look at our customer in many ways. But one of the ways we look at them is based on their household income. And when you look at the three buckets in the Macy's brand, under 75, 75 to 150,000, and 150,000 above, the traffic patterns and the buy patterns of those customers has really been unchanged through the course of 22, meaning I don't see a lot of downshifting going on. The Bloomingdale's business and the Bluemercury business has been strong. And you saw that in our post for the third quarter, our expectations for the fourth quarter. And we're a department store, so we have multi-categories. You might have a customer that is going to a private brand versus a market brand in one category, but they might be reaching up and buying a luxury item in another category as they're completing their holiday basket. But the spend levels in aggregate are about the same. I don't see a big change depending on income level.
How about credit, how they're buying? Because, of course, you offer your own credit cards. How are you seeing the resilience there?
So right now, when our own credit portfolio and what we track on that, about 70% of our customers are known that are part of our loyalty program. And when I'm looking at, as you saw from our post, our credit income was up. So we do have customers that are carrying more balances on their credit cards. But importantly, we're not yet seeing stress on bad debt. You know, that hasn't emerged yet. We did expect to see more of that through the course of the back half of this year. And that hasn't emerged yet. So we're watching that one very carefully.
Talk to us about what you expect. Do you expect that the consumers can become... Talk to us about what you expect. Do you expect more concerns, more talk of recession, more pulling back from a consumer, more generally?
Yeah, well, I think the consumer's still relatively healthy. And what I do think, though, is that there's the compounding effect of inflation all around the consumer in all sectors, you know, in services, in discretionary and non-discretionary categories. So our customers are feeling that. I think what you're seeing right now in retail is the fact that think about where we were last year. Last year, all the press was about the supply chain woes, and that if you didn't get it now, you weren't going to have it necessarily for later. So it was really encouraging early buying. Right now, all the press is about the glut of inventory and that prices are going to get lower because retailers have to clear it. So I think what we're seeing is a return back to the 2019 pre-pandemic buying pattern for the holiday. That's why we're really saying, what does that mean for Thanksgiving? What does that mean for Cyber Week? What does that mean for the last 10 days before Christmas? So we're adjusting our plans to accommodate anticipated higher peaks.
What does that glut of inventory at your rivals mean for you, Jeff? Does it mean that they're going to be bringing down prices? What does that mean for your ability to keep the prices where you want them to be?
Yes, that's a great question. So obviously we don't operate in a vacuum, and you've got a customer that's very savvy. And they're using their price checking, you know, on their digital, however they engage, and they're finding out what the prices of that content is across the universe. What's really interesting about the fourth quarter is how much of it is new and how much of it is categories that's specifically for the fourth quarter. And we start planning for that back in the holiday of 21. We do lots of testing in Valentine's Day and Mother's Day and Father's Day. Much of what we have is new content, and much of what we have is exclusive. So there are particular patterns that when you think about the overhang of the inventory in the industry, it isn't going to affect Christmas buying. In those categories where there's overhang and when we have that same content, we are very sharply priced. We do not have an inventory glut that we're bringing into the fourth quarter. And that's been one of our secrets or one of our signs of success has been our inventory control. And so we're deeply determined to ensure that whatever happens in terms of the buying patterns in the fourth quarter, we are well poised with fresh inventory going into 2023.
Talk to us about Black Friday. Talk to us about the holiday. How big a spending opportunity is it?
So I think the holiday is, I'm looking at it from 2019. I'm looking at that run that is going on between Thanksgiving and Christmas. This year we have an extra day. That extra day happens to be a Saturday. We're ramped up and ready. We've made decisions on the hours of our stores, like Christmas Eve. That's a very, very important time for our customer, particularly with last minute purchases like fragrance and fine jewelry and some of the apparel categories. So we're going to be open up an hour later for that. We're totally ready on our websites. We're ready with all of our promotion, not more than last year, but well positioned on all the gift categories. And so, we are ready across Bloomingdale's, Bluemercury, and Macy's for the holiday season.
And talk to us about meeting the customer where they're at. Bricks and mortar vis-a-vis digital. There was a slight pullback in digital spending, for example. But is that just the way in which we're going to be at the moment as people come back to stores? What are you seeing in terms of the way people spend?
So, Caroline, remember that when you looked at our digital business back in 2019, it was about 25% of our overall omnichannel business. During the pandemic, it was 40%. We started the year expecting it was going to be like 37. It's coming out at about 33. So 33% versus a pre-pandemic year of 25. So still very robust growth. So even though our business was down to 21 in digital in the third quarter, it was up 35% to 2019. So I think this evolution of the customer omnichannel journey and more of those transactions being in digital, that's going to continue. But there is a new baseline that is being established in 22 versus where we were in 20 and 21 when customers didn't feel as comfortable going to brick and mortar locations to buy.
So what about, therefore, Cyber Monday, for example, the predictions there? Is that something you lean into?
Yes. Like, as an example, we're looking very carefully at how much of our digital business was being done in late October and the first 3 weeks of November last year. How much of that do we believe is going to shift to Thanksgiving and Cyber Monday, Cyber Week? We do expect a higher spike there. We do expect the usual Christmas lull that goes after that first week of December. We go into a lull of 2 weeks, and then it comes raging back more to brick and mortar traffic the last 10 days before Christmas.
And therefore, your investment. This is a time where maybe companies are pulling back in terms of investing. Are you still looking to be committing money to digital? Is it more about smaller format stores, off-mall opportunities? How do you ascribe the money you are going to spend?
Yeah, one of the things I think is, if I look at a kind of the Macy's strategy pre and post pandemic, I think one of the things I'm proud of is really what we're doing with our financial strength. And you look at our balance sheet, and really when you think about our capital allocation, and the first order of business in capital allocation is investing in the business. So to your question, we're deeply committed to ensuring that we're top notch in digital, that we've got a modernized supply chain that can accommodate that our stores are in great shape, that we're investing in our team of people, of colleagues, and that's serving us well. So we have not stepped back from that. So we're spending about $1.2 billion in our CapEx budget in 2022. And that's been about our average is about the $1 billion range. You can expect us to spend that in future years because, retail is about investment. And we've got to make sure that we're ready for the customer, however they're going to change. And digital, technology, supply chain are places that have given us a good return on that investment.
And Jeff, just lastly, I know you've been investing in your people. How is the talent pool? How is retention, or how is the idea that you might have to cut costs later down the line? Yeah,
so one of the things we're most proud of is if you look at our culture and you look at the engagement of our teams, which we measure with great rigor, we do it twice a year. We get about 90% of our colleagues that actually participate in this survey. They tell us what they think. But to your question, retention is up, turnover is down. We're paying our colleagues what they deserve. They're incented based on how well we do as a company. The base rates are up. When you look at the openings, it's way down from where it has been in the previous 2 years. We are well stocked and well ready with having all of our colleagues ready to go in our call centers, our distribution centers, and certainly our stores. So we're ready this holiday with a very engaged colleague force.